Hey, welcome traders. John Person here. Haven't done a video in a week or so. We've been on the road. First visited an amazing city, Columbus, Ohio. I mean, OHIO, right? Ohio State. But boy, what a clean city under everyone's radar. Phenomenal growth rate. I mean, they have an employment problem. They can't get enough employees. It's a booming city. Very impressed with it. Next stop was Chicago for the CME Group's futures trading event. I was very honored to be a part of, along with Terry Savage and a few other great speakers. So that was fun. And then we're going to be at the Traders Expo here in Chicago, and then off to Las Vegas for a little business venture there. Back home next week. So intermittent video updates for you. But what I wanted to cover was this week we have a plethora of tech giant and biotech giant, which would weigh on the Qs. So first and foremost, I wanted to go through and just give you a quick insight on what the condition of the market is using specific tools and different time frames. Up top, we have the major top 5 stock indices: SPYs, Qs, Russell, Diamonds, Nasdaq. All of these you can see by their symbiology right here. What you see on the chart is the PPS. This is a daily chart with the advanced decline analysis and then on balance volume. Now we've created this, actually worked with the guys at Genesis. This is Trade Navigator. We created this back in 2009. So this is something that for over 9 years we've been able to kind of get a better gauge of the health and the breadth of each respected individual stock market index, because of the fact that we have such a diverse market action and so many different sectors weighing on these leading group ETFs. It's important to judge, if you're trading one ETF, to watch what the conditions of that, and I mean by the health of the cumulative advancers over decliners and volume of each respected index. I'm sure that makes sense. Most people use data like the tick or the ARMS index, which is based off the NYSE, to trade the diamonds or to trade the Russell or to trade the Nasdaq 100 or to trade the spiders. And believe it or not, one sector has less effect is the NYSE, the New York Stock Exchange Index. It's like 65% interest rate sensitive, and we all know what the Qs is based off of, right? And the S&P's more weighted towards financials. All right, so where are we going from here, and what's the story? Well, first and foremost, let's take a look at some real obvious things. Part of my first book talked about candlesticks and pivot point trading triggers. And boy, look at this situation that developed. Here's a pivot, and there's a candle called the doji. Now, in of itself, it's not a sell signal, but what it does alert us to is indecision. You had one over here, and the market went down a little bit and then right back up. So the question is this one going to cause more of a pause, start to go up one more time? So you can see all these arrows. Which way are we going? Down, up, further, sideways? Well, from a seasonal perspective, we see the market tends to go down into August. This is not a normal time frame, but or market condition, that's for sure. But I do think if we change to one more higher time frame and go to the monthly, you notice that last month we formed another doji, and what happened? It was just indecision. The market paused, and then we've had follow through. Where are we in relationship to a calendar month? You know where we are at. We're closer to the end of July, even though it seems it just started. If we close greater than that high right there, we call that a failed doji top, and it would signal more upside. And we can only guess, maybe perhaps test and reach maybe a newer high. That's the next major monthly resistance for the month of August, and perhaps we could get the market up to 279 where we closed on Friday, up to 288. So it is a thought, it is there, it's a potential. Now, let's look at the Nasdaq 100, because quite frankly, this is the one that I'm looking that with this week's earnings. Now, we might have some positive news. We've got Amazon, Biogen, Celgene, like I said, Facebook's even coming out. So, I mean, there's something here for everybody. Twitter. So all the big guys that are contained on the Qs is coming out this week. Now, you'll notice that I've got this kind of like number 186.15. I'm actually looking for the market to get there. The advanced decline looked pretty healthy. The volume as measured by OBV, not so great. And this little thing here down here, the seasonal trend, Well, listen, let's face it, the market has not adhered to seasonality, so I'm kind of ignoring it right now. And for me to get maybe slightly bearish immediately, we'd have to kind of start to roll over and close below this moving average trend line that I'm just highlighting for you. And as you can see, if we did that, we'd break literally a trend as well. But what I'm expecting, based on my other forms of analysis, is for the market to get up here at this near 185, 186 handle. And if it does, I want to be positioned for putting orders in. And that's what we talked about for our weekly advisory service clients. Having orders resting to take advantage of a higher inflated price rise, because I would expect the market, and I am expecting the market to pull back. A, I don't think the volume is going to sustain a move up there. And B, we start to see other indicators are showing relative weakness, some proprietary work that we do. So up first, then down. And if it does go up first, be prepared around that number to watch the conditions. How strongly do I feel about that? Well, here's one thing that I would share with you. A week ago, I told all my investors and clients that looking at Amazon, for example, AMZN, I'm not saying we picked the top, but I do respect the pivot analysis, and that's what I want you to be aware of. Look at the quarterly person's pivot number right there. It showed at 1857.64. I can bring that into a better scope for you. 1857.64. You know, the high was 58.88. Now, we didn't sell off a whole lot, but I would tell you right now, this is one of those indicators that I was talking about. It's a proprietary volume indicator. Now, you can clearly see that the candlesticks here and the price action is higher than any other point in time. But notice what the volume is. It's down. That's what we call a volume divergence pattern. So Amazon, and I understand, 800-pound gorilla, no competition, don't stand in its way. But up at this level after earnings, I'm not sure if it's a buy the rumor, sell the fact, or if in fact people started to say, hey, after last week's quick run up, they took something off the table. But right around that $18.5, $1,900, that's just all of a sudden started to appeal to people maybe peeling back some of their positions. Notice here we also have moving averages there, and we've got the price up here. The space between those two lines is what we call a little bit of departed from the means. And every time we've seen a historic move way away from these longer term moving averages, the market comes back. Gets too far away, pulls back. Gets too far away, it pauses, takes off, pulls back, pulls back. So you've been seeing this historically, and that's why if we overstretch the runway, you make sure you maybe have a short-term trade on an Amazon, or at the very least, watch for this QQQ to pull back. The Qs are also at a very dangerous situation right now in terms of a upside momentum. And I would have to tell you, I really think that this would be a great trade if you watch and be patient and look for that upside. I think you'll have a good shot for buying either the September, if we get to 186, I'd buy the 180 puts for September expiration. And that's kind of what we're looking for. Or if you want to take a little bit of premium or just maybe reduce some of the cost of a higher implied volatility than a bear put spread, meaning maybe buy the 180s and sell the 175 against it, a 5-wide spread, something like that, heading into September. We'll get more information as we move forward into this week. So that's what I wanted to go through. What does it look like on a short-term basis? Well, what I've done, as you can see on my TradeStation radar screen, we have several different things lined up here, gang. First and foremost is my person's market catcher. It's also available with Thinkorswim. We're going to give a great in-depth class at the Traders Expo tomorrow on that. If you're in Chicago, show up to that class. We're going to be using Thinkorswim platform. Next, look at this, guys. Everything, if it's red, not so good. We want to see relative strength outperforming the market. We want to see really good, strong numbers. And this is all red, and that's not that strong. So what do we have going into this week? Pretty big earnings. We've got Twitter, Under Armour. So I want to dissect with you a couple of them. Let's take a look at Twitter. Because despite what the implied volatility is, despite what everything else is showing us, there's a couple concerns that I have with Twitter. Namely, The pattern of the volume action is, in terms of percent change, it shows a lower high reading. In other words, like you can see a lower, if this is the number 1 point, that's a number 2 point, it's lower, and the price is higher. That's a volume divergence pattern. The momentum turned red, negative, and also has been declining. And this is the person's market catcher, the relative strength against the overall market, namely the SPY. It's declining. So what it's suggesting is it's been losing its positive momentum. It means it's vulnerable for a decline. Now, interestingly enough, NFLX, I don't mean to be after the fact Johnny, but I'm not. We warned everyone about this in our advisory service last week. Had the same similar types of pattern. We saw that relative strength was declining versus the overall market ahead of the earnings. Market was making newer highs. The momentum reading of this histogram was declining, and the volume was trending lower. You can see it right there. So with that said, when I get those types of patterns, it kind of gets me to think that maybe the good news is priced into the market. So does that mean we're going to see a market crash? Well, maybe a couple stocks don't go up, or maybe they go up and they fail. I think we're reaching an impasse. But here's the bottom line. Facebook is in the Nasdaq 100, Biogen's in the Nasdaq 100, and maybe we get some follow-through upside in the biotech sector, strength coming from Biogen, maybe strength from Amgen, maybe strength from Celgene. And if we get one or two of these technology companies, Amazon, for example, that has just one last puff up to the upside, that's where I think we've got that last gasp of air that we start to see the Nasdaq roll over to the downside. So that's what I'm kind of looking at for heading into this week. Now, I also did a video. Some of you guys, you may have seen the video on gold, and you'd say, well, person said that it's maybe the next best setup. And so I wanted to point out that I said to be watching this over the next week to 10 days. So here's 5 trading days. The market did go down, and it stopped where? Right dead on a dime at a person's pivot. Let's look at the conditions of gold. Looking at gold futures relative to the overall market, here's an interesting observation. This is a technical reading, gang, which shows we had a low in the market price back over here. Now we have a newer low, and we have a higher reading. So that right there shows bullish convergence on one indicator. What about the volume? How strong of a sell-off was that move last week with participating volume action? And clearly, you can see we are again at newer lows than prior time periods, right? I mean, there it is, newer lows. But the volume did not make a newer low. So we have several different metrics that we're looking at. The conditions of this market did not really melt down on heavy duty volume. If it did, I'd be a little concerned. So therefore, GDX. Look at GDX. Gold goes down and GDX is still in a sideways pattern. And look at this. The relative strength is improving while gold's going down. Gold stocks aren't really deteriorating. Now, this week we have Agnico Eagle Mines. We have a bunch of little gold miners coming out with earnings. So if they report some positive news, perhaps we could see some upside. Gold typically from a seasonal perspective goes up in late July, early August. And this would be an area that if we are going to see a continue, and it's been behaving according to its seasonality. So if it continues to behave according to seasonality, the next best trend will not be to continue to the downside, but will reflect an upward movement. And I think you want to be maybe more positioned in the gold miners. So that's my 2 cents for the week, to still just to update you and follow through with what we were stating last week with the gold and the next best potential setup. Now, look what happened last week. Option traders, there's a lot of different ways to play this. We could do what's called, and I'll just throw strategies out there that many of you are familiar with. A bull put spread, taking in premium but having some protection, and then having theta on our side. That means time, being short premium. Next, I also think that once we get a very bullish trend intact and it starts to confirm, we have what's known as a volume convergence. The market has actually made a newer low, an inverted hammer pattern right here, followed by a doji. Gang, you close over this line in the sand, which is 22. It's a last conditional change, what we call LCC resistance. What is LCC? It's a combination, a series of levels, which I wrote about in my book 15 years ago, and it's involved in still to this day, everyday trading as in a trading system. If we get a last conditional change breakout, we break above a downtrend line, 22 would be the number, and maybe we start looking at some aggressive longer term, maybe the October or September ratio back spreads, short one, long two for a delta neutral play. So those are some of the strategies that I would look to employ once we have confirmation that the reversal trend's intact. Until next time, I hope you enjoyed the outlook and some of the technical tools and what we use to put good trade ideas together. Thanks, everyone.